Are we in a buyer's market? Has the rate drop improved demand? Are prices coming down? Today, I'm giving you the lowdown on the November 2023 Phoenix housing data you need to make an informed decision as a buyer or seller in Phoenix, Arizona. Hey y'all, I'm Heidi Littleton, your realtor here in Phoenix, Arizona. Let's get into it. Can we please take a moment to celebrate rates finally making their way down? November was a stellar month for mortgage rates, and December is picking up right where it left off. This is fantastic news all around. So far, we haven't seen a shift in demand from this drop, but we are also in our slowest part of the year for real estate. It is estimated that if interest rates drop even 1%, there are 5 million buyers waiting. That is mind-blowing. There have also been headlines floating around the past week or so about the Fed cutting rates 4 to 6 times in 2024. Of course, nobody has a crystal ball to determine if this will happen, but if it does, we can expect a few things that will significantly affect buyers. Number one, demand will increase significantly. This will lead to an increase in competition, reduction in seller concessions. We may see multiple offers and people waiving appraisals, inspections, and offering their firstborn children. Number two, if demand increases and our supply continues to be low, prices are likely going to increase. As things sit right now, and I'll chat about this more next, home prices are likely to rise minimally next year. However, if rates continue to drop, buyers are going to come out in full force and we will have increased demand. Prices will go up. Now, I don't know if this will be the same as the pandemic market, but if you were looking during that time, you know it was pure chaos. My advice, don't try to time the market. That is a losing game. What I would do is get into the market when you can. I don't know anyone who bought, yes, even with higher rates, that won't regret it in the future if values significantly increase in the coming year. With the slowdown in demand and gradual increase in supply, we are now seeing the majority of cities in either a balanced market or a buyer's market. Now, keep in mind, this is a snapshot in time. It does not mean prices are going to come tumbling down. 9 out of 17 cities are still weak seller's market, with Paradise Valley and Peoria in the balance zone, while Cave Creek, Surprise, Buckeye, Goodyear, Queen Creek, and Maricopa all in buyer's markets. Maricopa and Queen Creek and Buckeye have dropped below 70 on the Cromford Market Index, so buyers have a strong advantage in these locations. What all this means is that for the time being, buyers may have an edge over sellers when it comes to negotiating, and that sellers will need to ensure that their home is in tip-top condition and be patient with listing. Some of the slowdown in demand is normal due to seasonality, and part is due to the higher rates. This could quickly shift in the new year as rates continue to trend downward, and we start to move back into our busier real estate season. If you are a buyer who's been on the fence, now is a great time to find a deal. Sellers, be patient. This isn't the time to expect an offer in 1 week. Given all the factors, it may be closer to 3 to 4 weeks before seeing an offer. I don't talk about this in every video, but from time to time, I overhear someone discussing how we are about to see a wave of foreclosures. So let me clear that up really quick. Despite high mortgage rates and reports of delinquency problems in car loans and credit cards, the vast majority of borrowers are keeping current with their mortgage payments. Serious delinquencies on home loans fell to a 17-year low in October, according to Black Knight Financial Services. Although national foreclosure stats jumped to their highest level in 18 months, they are still 25% below pre-pandemic levels. Looking at the pending foreclosures for Maricopa County, we are still below 1,000 pending foreclosures, which for a county as large as Maricopa, it is a very small number. So no wave of foreclosures here. Okay, let's get into the nitty-gritty. New listings have not yet stopped rising, although the rate of increase is slowing down. Last year, we saw the count decline from early November, and we appear destined to end 2023 with the same supply, roughly the same as we started in January, around 16,000. Supply usually weakens each year once we get to Thanksgiving. If demand can hold its trend, then we are optimistic that the weakening market can stabilize by the end of the year. After rising during October and peaking at an average of just over 8% mid-month, mortgage rates declined thereafter and tumbled throughout November. In theory, this should have injected some life into housing demand, but there's precious little evidence of this in the numbers. We have fewer homes under contract than last month and far fewer than a year ago. Sales counts are also down from last year and last month, reaching the unusually low level of 4,600 in November. One reason for the severe lack of demand may be that home prices are noticeably higher than a year ago, something few people were predicting predicting 12 months ago. Despite the weak demand, supply is still below normal, which is preventing prices from tumbling. Supply has risen for several months, but is now stable again as few people list their homes in November, and several take their homes off of the market for the holiday season. We anticipate more supply appearing here in January. Let's chat about prices. Our median sales price was $440,000. This is down a little bit from October 22, but up slightly from last month. What's great is if you bought anytime in 2021 or before, you likely have equity in your home. That's exactly why you bought. We are now in line with where we were in October 2022. So if you bought between October 22 and today, you likely have just a tiny bit of equity too. Now, if you're like me and you bought at the peak of mid-2022, don't despair. First, remember, this is a long-term investment. Two, prices have been increasing, albeit slow, after the big plummet we had at the end of 2022. Prices are predicted to continue increasing next year. Now, how much will really be dependent on the interest rates. Let's chat about seller concessions, as we've seen even more changes compared to last month. We are seeing 45% of closed sales have some amount of seller's concessions, with the median amount being $9,500. As a comparison, last month was $8,950. That's $550 more this month. We are seeing the majority of concessions being offered in the $250 to $500 price point. In fact, in the $300 to $400 price range, we are seeing 58% of closings offering seller concessions, with a median amount of $8,100. If you are needing seller concessions to help with closing costs or to buy down your rate, now is the time. If or when rates come down, this is typically the first thing to go. I will be doing a year-over-year breakdown next month, as well as share some of my 2024 predictions, so stay tuned. As always, if you have any questions about buying, selling, or the Phoenix housing market, don't hesitate to call, text, or email. All of my contact info is below. If you found this video helpful, don't forget, give it a thumbs up and subscribe to my channel for more updates, insights, and the latest Phoenix real estate market data. Until next time, happy house hunting.